Yeah, so for me, I mean, the trend is your friend until it isn't, right? So I mean, you have to continue to go in that way. As traders, we just have to be very aware of when the trend changes. So for me, the if price were to eclipse this big move down, that would be a potential trend change for me. But for me, there's a couple things that I worry about with Bitcoin and why maybe it hasn't quite bottomed yet. Number one. So I think 2023 is going to be a transitional year, and that's exciting for me. So it's not to say that I still don't think Bitcoin might head down a little bit lower, but I think it's going to be the key year where it puts in a bottom. And I actually think that it will start to become the asset that everyone has hoped it would become, which is kind of a safety asset, an asset where when the government is printing money, it actually does, become the safe haven, or when the economy is going badly, I actually think it becomes the safe haven. So I do think that coincides with regulation. So I do think 2023 is going to be a really intriguing, interesting year, full with lots of opportunities. Yeah, so for the most part, yeah, and that's a great question because as a trader or a swing trader or even as an investor, it's so important for us to kind of think outside of the box because when any one side becomes too big in terms of hearing that narrative and only that narrative, it tends to draw us in, and we really want to stay independent to really see what the truth is, right? And so for me, it's looking at the charts, and the charts are the clearest, most precise way to get through the noise into reality. And so, for instance, if we look at the Bitcoin chart here, so you have this pivot high, which was your FTX high pivot, down to this high, and you could see how price was kind of going here. It crept above, paused, kind of retested that line, and then it's gotten this little bit of a bullish move. Now, as soon as we get the first bullish move, we start hearing about, oh, the bottom's in, we're going to go to new all-time highs in 3-6 months. In reality, that's not what it's telling me, right? So this is a short-term bullish move, which is inside of a bear market. But the biggest thing to me is this high pivot right from the FTX collapse. So if price were to get above that, like let's say we do have an incredible bull run and we take out this psychologically significant high, which was when FTX collapsed, then to me, now you can talk about the potential for a low is in and maybe a new bull market is on the verge. But as long as we're inside of this is a classic bear flag pattern, right? So, you basically take the drop and this inside chop, and that's bearish overall. So again, it's just the purity of the charts where you can have these little intra-bear market rallies, but until significant pinpoint levels are taken out, you have to be in the camp that we're still in a bear market. That means Bitcoin and crypto is vulnerable for more downside, and you want to be protective against that. Yeah, so for me, I mean, the trend is your friend until it isn't, right? So I mean, you have to continue to go in that way. As traders, we just have to be very aware of when the trend changes. So for me, if price were to eclipse this big move down, that would be a potential trend change for me. But for me, there's a couple things that I worry about with Bitcoin and why maybe it hasn't quite bottomed yet. Number one, in past cycles, in bear market cycles, prices dropped 80+%. We haven't dropped that much yet. We're getting close, but we haven't dropped that much in Bitcoin's price since the all-time highs in 2021. And Bitcoin does not have printing money going on. And so the question is, does that mean the bear market low is going to be less or more of a downside move? And again, to me, it would make sense that it would be even a little bit worse because the Fed is not printing money. And again, one of the things that I'm really keen on is if we can get regulation in the space. I know a lot of people don't want regulation, but I think after you saw what happened with FTX, you need transparency. Then I think that could be a catalyst for the next bull run leading into the halving in 2024. The thing that would make the most sense to me in regards to it maybe not doing that is to think about the stock market, right? So as the stock market gets bigger and bigger, yeah, you have bear markets where we'll see, a 25, 30, 40% move down. But the more mature, the more investors that a market has, the corrections are usually smaller. Even if you go back to 2008, 2009, the Great Recession, which was a horrendous collapse in the financial system, the S&P only dropped 66%. Mainly, again, it's a mature market. So I think there's something to be said for that Bitcoin is maturing, and it's going to draw more interest from a larger group, and then ultimately they could be in a position to maybe not correct 80 to 85%. Yeah, so my view is somewhat on the more bearish side for the S&P 500, and one of the reasons is you can see on the weekly chart, but even more so on the daily chart, is that as of now we still have this downsloping trend line which is keeping price in check. And then after this most recent fall, we've seen kind of a bearish flag pattern start to develop. Obviously, markets have had a big move up here over the last couple trading days, but we're coming right into this trend line here. And if you basically look at this, right, so you had this scenario where you popped up, you fell into that level, then you went up here, you hit it again, you went up here, and then you broke through. And there's a tendency for markets to retrace to what I call the scene of the crime, which is that trend line before the next leg down. And so as long as we stay within this pattern, this would be, again, a bearish pattern with then a target price of that yellow trend line, which we actually got really close to on the S&P today. So I actually think, I've gone on record saying that I think the S&P will at one point be down as much as 25% in 2023 from where it opened. And, it's one of those scenarios where I think the Fed is really missing the boat by tightening too much. Absolutely, they have to get control of inflation, but at the same time, they're over tightening too quickly, which is then going to probably spin us into a recession. So to me, when I look at what the Fed has done is they have moved too quickly. Like to raise rates, if you think about the percentage gain, and again, a lot of times you'll hear comparisons back to the 1970s with Volcker and into the 80s and how he raised interest rates from 12 to 18%. And if you look at that, what percentage move up was that? So it was about a 50% hike in interest rates. But what you look at here with the situation now is we were at 25 basis points, and now we're basically at 5. That is hundreds and hundreds of percentage points increase. And so you have to think that that's going to have a more dramatic effect on the economy. Now, I think for the Fed, we're going to see a situation where, and they've even said this, they're scared about repeating the mistakes of the 1980s, and it's going to make them not want to lower interest rates right away when we hit a recession. And I think that's going to be the big issue for the market. So I expect this year 1 or 2 more rate hikes, probably 25 basis points each only. And then I think they're going to go into pause mode and just keep interest rates where they are for a significant amount of time. And I think that's where the market is going to get sketched out. It's going to get scared because they're going to see, or the economy is going to go into a recession, and then all investors are going to say, okay, Fed, can you lower interest rates? And they're going to say, well, we can't do that because we're worried that inflation is going to rip higher again. And that key, remember, we have not had a stock market or an economy without the Fed intervention for now, 15 years? Since 2009, so that's 14 years since the Fed has been printing money. And so it really creates this expectation of the investor that the Fed will always rescue us. And I think that's why asset prices in the stock market are still as high as they are. We think that the Fed will come to the rescue, and I don't think they will this time, at least not initially. And I personally do see the need for Bitcoin. I think that Bitcoin was created out of the ashes of the financial crisis and the Fed printing money, and the idea that governments just printing money is not sustainable in the long run. And I do think that even though the Fed is being resistant to lowering rates and doing stimulus, there will be a point where the economy gets so bad that the Fed will have to print again. And again, the idea hopefully is inflation is low enough where it doesn't make inflation go into some sort of hyperdrive. But I do think that that's the reason Bitcoin has been created, is to be that digital gold. Well, maybe it wasn't created initially as the digital gold, but I do think it is going to become that. And I do think there's a need. I mean, if you look at various countries, third world countries, the way that so many of their citizens are now using Bitcoin, that's the need there. For me in the US, the reason I hold some Bitcoin is for the idea that the dollar will eventually be printed and no longer be the reserve currency of the world. And so it gives me a store of value versus the US dollar. So I do think that either way, even through this nasty bear market, Bitcoin will survive. I think a lot of the alts won't survive. Maybe the top 20 will, but I think for the most part, you'll see a big cleansing of the crypto markets. Anytime you have it become more expensive to mine, that's going to force supply to be cut down on new Bitcoins hitting the market, and therefore price has a tendency to move up. But having said that, I think that it's just one piece in an overall much, much bigger puzzle for Bitcoin moving up. So for instance, we mentioned it before, but if you get regulation, I think that draws in big money. And I'm more of an investor. Right. I'm an investor, so I actually want big money, institutional money involved so that price goes up much, much more than it otherwise would in a shorter amount of time. And so I think you need that. You need that institutional involvement. The only way you're getting that is with some sort of regulation there. So I think regulation's a key. I think the halving is key. And I think ultimately cleaning out the industry of these FTX type scenarios so there's trust, right? I mean, when you have a situation where investors don't even trust having their money on exchanges, that's problematic. I mean, that's horrendous for the industry. And so if you can build that trust back up, that's an instant winner in terms of potential upside on Bitcoin along with the halving, where there's a forced transparency, there's a mandatory audit maybe 4 times a year of cryptocurrencies. I think for me that would be that would make me, I mean, I can just speak from my personal viewpoint, but right now I have some investments in Bitcoin and in crypto. I would be much more willing to put a lot more money into crypto if we had some sort of, transparency, right? And so even, and I'm not a whale by any stretch, but even I would feel more confident putting money in if I felt more secure about the industry as a whole and the fact that there's hopefully no more bad apples like Sam Bankman-Fried or anything like that. I basically would use that as a secondary factor, so it's not a major factor like it would be for a stock or a commodity close. And mainly I say that because you have a scenario where if you go to the spot trading, you're not going to get those same gaps. So there is some sort of power to gaps when it's on the CME, but it's not going to be as powerful. So I wouldn't trade just off of those factors. If I had a second, like let's say you had a 3-bar surge into a gap, then that would be something I would look a little closer into in terms of getting a bounce. Yeah, so the Dixie to me is looking like it's actually breaking down here, right? So we see this trend line right here, it cuts through here, you hammered right here, and we're actually breaking lower here. So for me, I think there's a little bit more downside on the Dixie here. I have a next pivot point right here at this level around 101.22. That's what I'm looking for. And again, what that tells me is if the dollar is going to continue to fall, number one, that's good for Bitcoin probably in the near term, the next few days. And number two, it's probably good for the stock market in the next few days as well. So I think that's very, very interesting to kind of take note of here. Let me look at the weekly. I know you were asking about the weekly. Yeah, the weekly to me, same thing. You can see this little bit of an area of support here, but it looks like it wants to now head down towards this area right here around 101.